We very well may have found the one catalyst that could keep gold above $3,000 an ounce with what a billionaire has just done with a huge bet on gold. Let's talk about it as we explore. I'm not a gambling kind of guy, although I did make a bet with somebody who has yet to pay up on it. I don't make a bet unless I know I can win it. But nonetheless, there's a billionaire investor that owns one of the biggest hedge fund companies in the world that has put a huge bet to the tune of $319 million on gold. And we're going to talk about that in this video. And, there's a lot of things that we must take into consideration that could move the price of gold downwards. But there's a whole lot more that could keep it up. Even though some feel that we have reached the peak for gold, there are going to be dips. Whenever there are dips, well, check out my friends over at Summit Metals. They indeed have some good deals going on right now for gold. And there are several of you who have taken advantage of some of those deals. You're one of those companies that just has the lowest price. Oftentimes, not all the time, but often enough, that they should at least be considered as you're shopping around for the best deal out there for gold. Now, the gold market is struggling right now. It's kind of, hovering down from its its all-time high, just almost at $3,500 an ounce. But that's adjusted for inflation to be the highest gold has ever been in the history of the planet. But it is struggling as it has been unable to hold initial support levels, but some key investors have taken a renewed interest in the metal. Billionaire investor Ray Dalio, who is the co-chief investment officer of Bridgewater Associates, has long been a gold bull. So it's kind of no surprise that that's the billionaire I'm talking about here. According to the firm's updated investment disclosure, he is now putting his money where his mouth is. Updated 13F filings with the Securities and Exchange Commission show that Bridgewater bought 1.1 million shares of SPDR Gold Shares, that's the GLD, the world's largest gold-backed exchange-traded fund, in the first 3 months of this year. The holdings are worth nearly $319 million right now. So that puts it into perspective and gives you a little bit of insight as to what's going on with gold these days and why it's likely going to stay high for the remainder of the year. Dalio's first quarter gold investment closely matched his previous bet on the metal. However, this new position was established at a much faster pace. Historical data shows that between 2000 and 2022, Bridgewater built a position in GLD that, at its peak, was valued at $400 million. However, all the shares were sold by the fourth quarter of 2023. Dalio has often emphasized the importance of diversification and has advocated holding assets like gold to mitigate risk associated with fiat currencies and geopolitical tensions. We know there's a lot of that going on right now, that's for sure. In fact, doesn't look like there's going to be any slowdown or that much slowdown in spending by the federal government, even with the latest big, beautiful bill, at least in its current form that is being offered. I believe a lot in diversification. Also, think that people don't typically have an adequate amount of gold in their portfolio, Dalio said in an interview with CNBC back in mid-February. When bad times come, gold is a very effective diversifier. Dalio added that in the current environment, investors should consider holding about 10% of their portfolio in gold. In fact, that is kind of the safest way. The most conservative estimates say that is a good way to do it, to hedge with about 10% of your portfolio. But it can go as high as 35%. For most of us that are hardcore stackers, it is much more than that. And during the first quarter, GLD saw its gold holdings increase by 61 tons as investors looked to hedge against geopolitical chaos and economic uncertainty. The second quarter has been more volatile. Gold prices rallied to an all-time high of right around $3,500 an ounce last month, but have since fallen, face significant selling pressure, according to Kitco here. And so that is what we're looking at here. So this is breaking news to see what's happening and part of what is propping up. It doesn't look like he's going to be selling anytime soon either. That's for sure. And, it's just amazing to see what's going on here with this. And it's not just Ray Dalio, but hedge funds are the new gold diggers. BlackRock, Goldman Sachs, and other state claims in GLD. This is according to Benzinga. Gold rush is back, and instead of miners and pickaxes, it's hedge funds and billion-dollar spreadsheets. Ray Dalio's Bridgewater Associates opened up a fresh $319 million position SPDR Gold Trust during the first quarter of 2025, as per a new 13F filing with the SEC. For the world's largest hedge fund, it's not a mere portfolio adjustment. It's a shiny declaration, and really that is really the bottom line that I think is profound. In fact, what I'm going to tell you here from what he said is quite intriguing. Ray Dalio, a longtime outspoken proponent of hard money, otherwise known as sound money, because we know that gold is indeed sound money. It has been money for thousands of years, and that has not changed nor will ever change, no matter what politicians, empires, epochs, generations, or the market, or digitization, or technology say. You cannot manipulate gold in the long run, and you can only manipulate its price. Physically, it is inert. It doesn't do anything. That is the appeal of gold, hence why it's treasure, because it's rare enough, just rare enough, and it's valuable enough based off of its physical properties. Even central banks are holding it at a record rate and pace, and that is not slowing down either. Coupled with this and what other organizations are doing to hold it, including us and others around the world adding it in physical form, well, it's a good idea to believe that gold is likely going to stay above, right around or above $3,000 an ounce, probably for the foreseeable future. Dalio, who is a long-time outspoken proponent of this hard money, sound money, recently doubled down on his opinion during a presentation at Abu Dhabi Finance Week, forecasting a coming debt money problem due to the hyper-borrowing by the U.S., China, and virtually every large economy other than Germany. Dalio expressed his fondness for the likes of gold and Bitcoin over conventional debt vehicles. And you know what? He's right. There's a lot of that happening. Of course, I don't know why he's excluding Germany. My bet is probably German. Germany is doing a lot of the same thing. But if you are a German, let me know in the comment section below what's going on there with their situation. Germany is the largest country and basically the most powerful in the European Union. And so, yes, it's crazy over these debt vehicle instruments. He's not the only one embracing this golden gospel. No, institutional investors are flocking to the yellow metal at a furious clip. 1,187 GLD shares were added in the last quarter. BlackRock, Goldman Sachs, and UBS all bulled up their gold ETFs with positions in GLD, according to Quiver Quantitative. So yes, GLD is sort of the gold heavyweight champion, and a lot of people have been buying it, kind of just as is the case with the SLV for silver. And so it's interesting. And you notice that these big companies are not putting that much into the SLV or silver. So it kind of makes you wonder there, why is it being missed right now? Well, it's a subject for another video, but nonetheless, gold is king, and it reigns supreme. No question about it. So what an amazing thing. And in fact, with gold trading at near all-time highs, even with the pullbacks we've been seeing, it still is comfortably above the $3,000 an ounce mark. In fact, right now it's hovering right around $3,200, and likely we're going to see it stay there. My guess is probably with this news and other news, and with what's going on around the world, even if things were to normalize, I don't think gold is going to fall a whole lot more than where it is. In fact, with this news and others, even if we solve all of the trade deal problems and everything goes back to normal and everything is settled, and we solve the Ukraine-Russia situation and the Gaza situation, I think the gold could still comfortably trade probably around $2,800 to $3,000 an ounce. I don't think it's going to fall below $2,800 at this point. I really don't. If that is the worst case scenario, I think, with gold, there's just too much that is propping it up, especially now with what we just are learning with what Bridgewater and Associates and Ray Dalio is doing, as well as BlackRock and others. Let me know what your thoughts are in the comment section down below. I hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.